The RSI indicator can be an extremely powerful tool to add to your trading arsenal. It can help you find directional momentum in any asset that you're looking at. It can also help you find outstanding reversal trading opportunities. And that is why in today's video, you are going to be learning everything you need to know about the RSI indicator. First, we're going to take a look at what the RSI indicator is. Then you're going to learn how it works. Then you'll learn how to use it to find profitable trading opportunities. After that, we're going through how to build an entire rules-based strategy around the RSI indicator. And as a special bonus, towards the end of the video, I'll be showing you the exact steps you need to take in order to become a consistently profitable trader using the RSI indicator. So listen to this awesome track while the intro and disclaimer roll. Go ahead and subscribe if you are new. Go ahead and click that like button. Follow us over on Instagram if you have not already at The Trading Channel. And I'll be right back to tell you everything you need to know about the RSI indicator. Welcome back, and let's go ahead and get started with what is the RSI indicator. RSI actually stands for Relative Strength Index, and this indicator can be found on TradingView and in most platforms by going to your indicators and just typing in RSI and then looking for a Relative Strength Index, just in case you didn't know how to do that. And this indicator uses historical price to help us determine directional strength of whatever market we are looking at. For example, if the euro yen, which is the currency pair we are on right now, has directional strength to the upside, then we will see an RSI above 50. And I'm going to explain why that's the case in just a second. If we have directional strength to the downside, then the RSI indicator will be below this little 50 line. We can also use the RSI indicator to help us spot reversals, but more on that a little bit later in the video. Now let's move on to how this indicator actually works. So the math behind the formula for the RSI indicator can get a bit complicated. It's important for you to understand that you don't need to know this formula or be able to solve it out. You don't need to be a mathematician to use the RSI indicator, and you not knowing the formula will affect your trades absolutely none. But I do want to go over a brief overview of how the RSI is calculated in a very simple way. Simply put, the RSI indicator looks at the last 14 candles. And why is it the last 14, by the way? It's the last 14 because that is the look back period or length that we have our RSI set to. So whatever this is set to, that's how many candles it looks at. The RSI takes a look at the last 14 candles and it gets the average gain of the last 14 candles by adding up all the green candles and dividing that by the number of green candles. That's how you get an average. And then it takes that and it also looks at the average losses of the last 14 candles by adding the losses up for every red candle and then dividing that by the number of red candles. If the average amount of gain is above the average amount of loss, then we have an RSI above 50. That is a very simplistic way of understanding what the RSI is doing, but that's how it works. There are a couple of different ways to use the RSI indicator to find profitable trades, and one of those is looking for reversals using this indicator. That's what we're going to go over first because it is by far the most popular way to use the RSI. So here on the RSI, you can see a red line and a green line. These represent overbought and oversold scenarios. The red line is set at 70 with the stock settings of the RSI indicator, and the green line is set at 30. It won't be red and green, it'll have different colors, but essentially the line at 30 and the line at 70 show you overbought and oversold. Now, why is this important? If a market goes into this overbought area, that means it's had buying pressure. It's had strength to the upside for a while. And what we know about markets is after we've seen a big push up, oftentimes people do what? They take profit. What else happens here? People will sell to go short, and that causes pullbacks and possibly even reversals. So once a particular market, in this case the euro yen, gets above the 70 line, we are primed for this reversal situation. In the same way, here as we were pushing down and had momentum to the downside here on the euro yen, once we get below the 30 area, that is telling us that we've had a lot of momentum to the downside. And what we know about markets is when there's been momentum to one direction, oftentimes that can cause a pullback or possibly even a complete reversal, such as we saw here on the euro yen recently. Now, by itself, a particular market being in an oversold or an overbought condition by the RSI being under 30 or over 70 does not mean anything. And if you go out and try to trade that as a strategy, you will lose money hand over fist. What we have to do is actually combine this with a number of other technical factors like levels of structure, like higher time frame trend and higher time frame structure levels, like candlestick patterns and price patterns. A combination of technical factors is what creates a strategy and an edge in markets. And we're going to go over a full strategy using the RSI indicator for reversals later in the video. But right now, I want to talk to you about the other way we can use the RSI indicator for profitable trades, which is using it as a momentum indicator. Now, this may be something that you haven't heard of before because it's rarely talked about. And the way I do this, as we looked at earlier, the stock length or period, look back period for the RSI is 14. I move it to 7. And here's the reason I do this. Using the RSI in this way, what we're actually going to do is use the RSI to tell us there has been momentum that has entered the market in a certain direction. In the case of the euro yen where we are right now, the RSI is set to 7 because I want to know that in the last 7 candles, we've had a lot of momentum to the upside. Why would that be beneficial? Well, when there's been a lot of momentum to one direction, oftentimes we get what? We get a pullback, right? And then we get continued momentum to the upward direction. So the way I like to use the RSI indicator to find profitable trades that are in trend, that are with the momentum of the market, in other words, opposite of reversal trades, is by moving the RSI period from 14 to 7 to give me a bit of a faster look at price, then waiting for the overbought scenario, or at least waiting for the RSI to go above 70 to show me momentum, and then waiting for a pullback after this being one of my conditions. I must see the RSI 7 period go above 70. Then I look for a pullback that comes back into structure, and then I'll wait for some type of trading opportunity in that zone. And that's how I like to use the RSI indicator for momentum-based trend continuation trades that can lead to some huge profits. So now that you know how we can use the RSI indicator to find profitable trades, let's start building actual rules-based strategies. Let's start implementing everything you've learned so far, and we're going to start that right now. The reversal strategy you're about to learn is going to be incorporating multiple time frames, which you can see up here, along with chart patterns combined with the RSI indicator in order to point out possible reversals in markets. So before we even go over the rules to the strategy, I want you to understand that the way I personally create rules-based strategies is through a process I call CEST. Now, for those of you who have been a part of the channel for a while, you know what this stands for. For those of you that don't, C stands for conditions. These are things like multiple time frame analysis, things like the RSI indicator, things like chart patterns, things like structure levels. All of that would be examples of conditions. Next, we have E. E stands for entry. What is the reason you actually clicked the buy or sell button? That is your entry. A lot of times this is either chart patterns or candlestick patterns, depending on what you would, or limit orders or stop orders, just depends on what you pick to be your entry. But in order to have a good rules-based strategy, you need conditions, you need entries. S&T stands for stops and targets. So this is how we create strategies, and it's what the strategy you're about to learn was created using. So let's start off with conditions. We are on a 4-hour chart. As I said, we're going to incorporate multiple time frames. We're going to be looking at the 4-hour chart, and you can use any time frame for this. It does not matter if it's the 4-hour, 1 hour, 15 minute, or 5 minute. You're always just going to drop down one time frame. So I'm going from the 4-hour to the 1 hour. If you were looking at the 1 hour for this condition, you would go down to the 15 minute for your entry. If you're looking at the 15 minute, you go down to the 5 minute, so on and so forth. So on the 4-hour chart, what we're looking for is the RSI indicator to go below 30, or in other words, the RSI indicator to go to oversold. So we want to see when that happens. Let's go ahead and take a look here. It happens right here on the very next candle. As you can see, at this point, the RSI has now went below 30. That is our first condition. The next thing we want to do is drop down to the 1-hour chart. So after we see the 4-hour RSI go oversold, we're going to drop down to the 1-hour chart. Here on the 1-hour chart, after seeing our higher time frame go oversold, we want to see a chart pattern. And if you don't have clear definitions for chart patterns, and if you don't know how to identify them, I will leave a video right up here in the top right hand corner I did about a month ago that talks about double bottoms, double tops, head and shoulder, and inverse head and shoulder patterns, which are the chart patterns we're going to be using for this strategy. So if you're unfamiliar with them, just click that link, go to that video and check it out. So now that we know we're oversold on our 4-hour chart, again, we're just looking for price to create a double bottom. Here we have our first bottom. Right now, the way we're looking at this is price has pulled down, created one bottom and a neckline. Next up, for a double bottom, we want to see price come retest this line right here. That means we have a valid double bottom. Let's see what happens with price. Eventually, we come down and retest this actual spot. So this is condition number 2. 4-hour chart, we need to see oversold for condition number 1. Condition number 2, we go down to the 1-hour chart and look for a price pattern or a chart pattern, in this case, a double bottom. Now, what is going to be our entry? These are all the conditions we need met. It's what I just described. Now we're moving from conditions to entries. What's the entry going to be? The entry is going to be buying pressure. For buying pressure, I need a convincing green candle. So let's keep pushing forward. Right here we have a doji. Right here we have a small green candle. Doesn't look quite convincing yet, right? So we need to see a bigger green candle so that we know it's convincing enough to show us buying pressure. This would be a great example of this. And if you want to set a rule for this, pick a candle that closes above the previous candle. That would be a convincing green candle, right? So for our entry, we have a convincing green candle. For our conditions, we have 4-hour oversold. We have 1-hour double bottom. Now we have our entry. What do we do after we see our entry? We go ahead and place our order. It would look something like this. Buy at the close of that candle or the open of the next candle. Stop loss always for me goes below my double bottom, the lowest low of that double bottom. Targets, you can go back up to around previous structure right here. So with that being the case, now we have our trade set up and we have actually gotten into the market. We've pressed the buy button, and let's see how this would have played out. As you can see, quite easily pushing up to hit targets. Of course, this will not always be the case, but it's easier to show you an example of it winning. But just understand that this strategy, along with any other strategy you learn, also has losses. But hopefully now you get the gist of it. We will go over it one more time. Conditions: 4-hour time frame is oversold. 1-hour time frame has a double bottom or head and shoulders pattern. Again, if you need help with chart patterns, they're in the top right hand corner of the screen. Entry: after we have a valid double bottom, we want to see a convincing green candle. In this case, because it's a double bottom, it would be a convincing red candle in the case of a double top, which we'll take a look at. Stops under our double bottom. Targets: previous structure. You could do whatever you want to for targets. You can do a 2-to-1 reward to risk ratio. You can do a 1.4, which is my favorite to do because it gives me a higher win rate, plus above a 1-to-1 reward to risk ratio. You can do whatever you'd like for stops and targets, but be sure that you have all rules in place when creating strategies. Again, CEST. But that was a bullish version of the reversal strategy. Let's go ahead and take a look at the bearish version, and then we're going to talk about a full strategy using the RSI indicator for trend continuation trades. For the bearish version of this strategy, we are still on the 4-hour chart now. And what are we looking for on the 4-hour chart? What's our condition? Well, for a bearish version of this, we want to see the RSI indicator go above 70 and show us an overbought scenario here on the 4-hour chart. So let's click ahead here with the market and see what happens. Do we get overbought? Not yet. Are we overbought now? Well, an easy way is to look right over here. Whenever I hover over price, and if it's above 70, that means the RSI is above 70. So obviously at this point, we're at 70.88. We can now do what? Our condition number 1 is met. We have overbought on a 4-hour chart. We can now drop down to the 1-hour chart. Here on the 1-hour chart, what are we looking for? We're waiting for either a double top or some type of other chart pattern like a head and shoulders pattern. So if we go ahead and click play here, you will see that eventually, this would not be a double top, by the way. This is not enough in between. We only have one candle in between before that next top. Do not count that as a double top. You'll learn more about that, again, if you go over here to the chart pattern video we did about a month ago. But let's go ahead and click play. As you can see, we're moving around a bit, and now what has happened? At this point, we have one top, the neckline of the double top, and then pushing up, we have another top right here. This double top qualifies as a valid double top for that reason. With that being the case, now what are we waiting on? We have condition number 1 met with 4 hour being overbought. We have condition number 2, a valid double top. We're now looking for our entry, which is going to be a convincing red candle. So let's see if we get that convincing red candle. Yes, we do. We get a red candle here that closes below the last candle. That's pretty convincing to me. So what we would be doing is placing an order there, having a stop loss above our previous swing high because it's higher than this swing high. So we want to make sure the stop loss is above the highest swing high of the double top. Targets could go down at previous structure, which I'm seeing as this level right here. And there we go. This is our trade setup. And with that being the case, we'll go ahead and click play. We got pretty close to the stop loss, but then the market did in fact turn around, push down, and hit our target. We have the conditions of the 4 hour chart being overbought. We also have the condition of the 1 hour chart creating a valid double top. We then need the entry. We have a valid entry because we have a convincing red candle. For stops and targets, I go above the highest high of the double top and either previous structure, or for me, I normally do a 1.4 to 1 reward to risk ratio. So there was a bearish version of the RSI reversal strategy. Let's now take a look at how I use the RSI indicator for trend continuation trades. So here's an example of how I like to use the RSI for trend continuation. If I double click on the RSI, you'll see that we are set to 7, right? And right now we are involved in this live trade that I'll take you through in just a second, but let's go ahead and start from the initial break of the moving average down here. So initially we break above the 50 period moving average. Do we go into an overbought scenario right here? Yes, we do. So with that being the case, what am I waiting on? I would be waiting for a pullback into the previous level of structure that was broken, which is right here. So as we pushed up, moved into overbought, this is the most recent level we broke. If we broke that level most recently, then I'm looking in this area for a pullback and buying pressure. If I get that buying pressure, that's where I want to look to go long, considering that buying momentum has come into the market. The reason I know this is because the 7 period RSI has went above 70 here on our RSI indicator. Then after that, I want to see this pullback. I want the pullback to come to the recent level of structure that was broken, and I want to buy when I see buying pressure. This is just an example of how I would use it for trend continuation. So as we continue higher, you can see that we consistently repeat this process. We go into another overbought scenario. We then pull back, but we don't get to a level of structure, this being the most recent level of structure this time. So we actually went past it without actually getting any kind of entry reason. We then push up, we break above our level of resistance. We get a pullback into that level of resistance and a big green candle, but this candle is a little bit too big. I wouldn't feel comfortable entering right there. I need to have some room to the upside whenever I actually enter on a trade like this. We have another scenario where price pushes up and we get a new higher high. We go into overbought yet again. We pull back, but again, this huge green candle does not give me an opportunity to enter into the market. Then we push up to this high. Was this high an overbought scenario? Yes, it was. This high also goes above 70 on the RSI. With that being the case, I know I'm going to be looking for the level of resistance that was just broken, the level of structure most recently broken. And in this case, we don't just have a level that was tested once, but we have a level that was tested multiple times. That adds even more confluence to this area and shows me that this is a level I want to look for a possible buy trade. With that being the case, I wait to see buying pressure. So as we push down to this area, we get a strong wick rejection from this area, along with this rejection coming straight off of the 50 period moving average, which oftentimes acts as a level of support for markets. So with those factors coming together and throwing everything together here, we have a good opportunity, at least based on the way I trade trend continuation with the RSI, we have a good opportunity to go long after seeing that buying pressure. We are live in this trade now. I'll let you guys know how it plays out. This is actually a day trading time frame just to show you guys how to use this on multiple time frames. For the 15-minute chart, it's the same exact way I would use it on the 4-hour chart. Doesn't change at all. So with that being the case, we'll see how this trade plays out and I'll keep you guys updated. Here's the trade on the dollar Canada we were just looking at. As you can see, we are still actually involved in this trade right now, and I'm actually about to exit it. I want to go over why I'm deciding to exit this trade, and then we'll do CEST T for this trade and the strategy that uses the RSI indicator with a faster setting in order to take advantage of trend continuation trades. So first off, why am I deciding to exit this trade now? Well, it's because on a 14 period RSI, we have what we call RSI Divergence. And for those of you who are divergence traders, the only reason I haven't talked about that yet is because these two strategies do not use it. So don't worry, I am going to get to that a little bit later on in the video, including right now. I like to use this for taking targets. So whenever I see something like RSI Divergence and selling pressure, that's when I want to start looking at taking my position off. So let me define RSI divergence really quickly. It is very simple. It is when the RSI indicator has a high and then a lower high, while price has a high and then a higher high. For RSI divergence, when we're looking at overbought, it would be the opposite for oversold scenarios. But this being the case and seeing this massive amount of selling pressure with this big red candle, including the fact that we're getting closer to 5 p.m. and I don't want to hold this trade for another night, means I'm going to go ahead and close this position. So there we go. We've exited the position. Now let's take the chart back using market replay and talk about the full rule set, the CEST for this trend continuation trading strategy. So first off, we have our RSI length set to 7. The reason for this is because I want a faster moving RSI indicator to show me the most recent momentum of the market, because I'm trading pullbacks based on that most recent momentum. So with that being the case, our first condition for this strategy is that I need a 7 period RSI to go overbought at my swing high. Does that condition get met? Yes, it does. My second condition is that I must have a pullback into a major level of structure, into the recent level of structure that price broke. And if you want to add even more confluence to this, you want to have this level be a level that has been tested multiple times. So if those two factors are coming together, that is going to be condition number 1 and 2. So we have condition number 1 and 2 met at the time of this long wick candle right here. With that being the case, I have condition 1 and 2 met. I now need to look for an entry. My entry is buying pressure coming out of my level of structure. And this trade had even more significance because that buying pressure was coming off of the 50 period moving average. So hopefully you're getting the point now that the RSI indicator by itself doesn't mean much, but when we can add a lot of different confluence with it, like candlestick patterns, like levels of structure that have been tested multiple times, like using it for trend continuation by shortening the length of the RSI, like trading it only when we're in the correct trend when we're using the short period RSI, which is something I forgot to mention in conditions. For conditions, we also need to be above the 50 period moving average. So keep that in mind as well. Our entry candle, long wick candle, showed me buying pressure coming out of that level of structure. And we've already seen the results of this trade. But let's go ahead and talk about stops and targets before I click play. Stops and targets are quite simple. For stop loss, I just went below my entry candle because in this case, your entry candle may or may not be the swing low. So I always try to go below the swing low of this pullback that came from the RSI being above 70. For my targets, I normally go with either previous structure or whenever I see RSI divergence. You can pick however you would like to take targets. For me, it's more of a subjective term. Targets are very subjective for me. That's why it's so hard for me to tell you some objective rules. But initially, I like to look for a 1.4 to 1 or structure levels. In this case, I let the market go a little bit further. But that was the whole trade setup. That was our reason for pressing the buy button, was seeing our long wick candle come out of the structure level after all of those conditions were met. And as you've already seen, this trade ended up working out very well. Again, I will say this does not happen all the time. This has losses. It has a lot of losses, just like any other strategy. But over a long period of time, it tends to make money for me in the way that I traded. Now let's take a look at a bearish example of this strategy on the pound yen. Now we're taking a look at the pound yen, and we have another example here of the trend continuation RSI strategy. We're going to go ahead and place our order, and we're going to have a stop loss just above the swing high with a target that's going to be close to our next structure level. Let's see, right about there in that area. And with that being the case, we're going to go ahead and create the order. We're going to use a 1% risk on this trade, and it needs to be a market order, not a limit order. And let's go ahead and sell. All right, so now we are in this position. I'll keep you guys updated on how it plays out, but for now, let's go ahead and take a look at the rules for the bearish version of this strategy. We ended up getting some really good movement out of the pound yen to the downside last night, which ended up hitting our targets. But now let's go through CEST for the bearish, version of this strategy. So conditions, what do we need? First off, I didn't mention this on the bullish version, but we need price to be in trend based on the 50-period moving average. Is price below the 50-period moving average? Yes, it is. We then need to see the RSI 7-period go below 30 because that's showing us that at least in the short term, we have momentum to the downside. We can tell that this is momentum though, right? You can tell by this waterfall of red candles, we have momentum to the downside. But as I said earlier, this gives us a objective way of saying that so that we're never subjective with our strategies, which is how to create rules-based strategies. Condition 1, under the 50-period moving average. Condition 2, under 30 on the 7-period moving average. Condition number 3, a pullback into the latest level of structure that was broken. After those 3 conditions are met, conditions times 3, we now are ready to start looking for our entry. For our entry, we want to see selling pressure at this area. Selling pressure is our entry. So now we have conditions and entry. Again, the stop loss above the swing high, target down at previous structure. And after hearing that twice, hopefully it made this strategy extremely simple. It really is not a very complicated strategy whatsoever. And what we'll talk about again is a little bit of divergence. So here, just to explain divergence really quickly, because I have not hit on it yet, other than just now in the previous section of the video, what we have for divergence in the oversold territory is a low that matches a low in price. We then have a lower low in price and a higher low on the RSI indicator. This is an extra confluence, an added indication that we could see a reversal from this point. So if you ever want to add a little more confluence to an RSI being oversold or overbought, then be sure to look for divergence in the RSI indicator. As I always say, it is super important for you not to go and just randomly start trading this because I showed it to you as a strategy. Trading takes a lot of work. If you want to lose weight or gain muscle, you can't just go to the gym and watch everybody at the gym. You have to actually put in work. Trading's the same way. You're not gonna be able to watch a YouTube video and then go be profitable. So your next step is to backtest these strategies if you're going to use them. At least now you have an idea of how the RSI works and a couple of examples of how to create strategies with them. Obviously, there's an unlimited amount of ways to use the RSI indicator. These are just a couple of ways that I like to use it. What I do want to go over right now, though, is a very simple way to do the backtesting. On this strategy, it's a single time frame strategy. So it's super easy to backtest this strategy. You don't need an explanation. Take all the rules that are CEST, look through historic data, see how many times it won versus how many times it lost. And if that comes up with a positive expectancy, then you have what you need to take your next steps, which we'll talk about later. But a very easy way to test the multiple time frame strategy that we talked about is to go to your higher time frame and then get your 14-period RSI on the 4-hour chart, which is the chart that we're using. And all you have to do at this point is circle everywhere that went oversold or overbought on this 4-hour chart. You don't have to actually circle the RSI. I'm just showing you that price did go overbought in this areas. So here we have everywhere that price went oversold or overbought, and we're just going to circle every place that happened. Once you have that done, you can drop down to your 1-hour chart and you can look for double bottoms and head and shoulder patterns in those circles. Super simple way to backtest that strategy. So now you have no excuses for not backtesting it. This strategy is just as easy as the other one to backtest whenever you take the steps of just circling every area on the larger time frame where price went overbought or oversold. I'm super glad that I was able to give you guys some value today and also teach you what you need to know about the RSI indicator, but this is in no way the end of the road. Now, let's talk about the steps you need to take to use this information to actually become a consistently profitable trader. Before we begin, for those of you who would like to learn more about the Pine Editor and Strategy Tester, we've actually got a long-time graduate from the EAP Training Program. His name is Matt, and he gave us a completely free RSI indicator. This indicator will tell you when the RSI indicator goes oversold or overbought in that scenario, and after hitting that scenario, it will tell you if the price of a certain asset printed an engulfing candle. So that's actually a pretty cool and nifty little indicator that if you would like to use, you are more than welcome to. I'll leave a link for this indicator in the description, and what Matt does is he actually teaches people how to code in PineScript over here on his YouTube channel. And what you will learn here on his YouTube channel will help you to build off of this RSI indicator he's provided us for free. It's linked in the description, and you can go to Zen and the Art of Trading or just the Art of Trading on his YouTube. You can find both the link to his YouTube and his trading view listed below. Again, you can also find this free indicator he decided to provide us with for viewers of this video. So if you have plans to ever test a strategy based on RSI being oversold and overbought with engulfing candles being the entry reason, then this may be something you want to look into. That will be linked in the description. But I absolutely vouch for Matt. Again, he graduated from the EAP Training Program years ago and has since then went on to not only have a profitable trading career, but to start teaching others how to do so as well. So check out his channel and his trading view, again, linked below. Let's start talking about the actual steps that are needed in order for you to become a profitable trader. Knowing how to use the RSI is great, but that's not going to get you to a profitable trading career. I know how all of us start. We all start thinking that we're going to have this awesome trading career because we watched one YouTube video, learned one strategy, thought we learned something, went out, tried to trade it. By the way, I did this too. Went out, tried to trade it, and won 2 or 3 trades. Thought we were invincible. Before we knew it, though, we started losing, and then all of a sudden we lost a lot of trades. Then we decided that strategy didn't work, and we've moved on to other strategies. Again, if this is something you've been through, then I'm sure you can relate. If you have not been through this yet, it's something that you will go through if you don't follow this process. I've been teaching traders around the world, and I've taught tens of thousands of traders over the past 5 years, or almost 6 years at this point. And what I've learned throughout doing so is that the path I have on the screen in front of you is one of the easiest paths for someone to go from knowing nothing to becoming a profitable trader, or even from struggling to becoming a profitable trader. And the reason that no one ever gets there, and the reason it's so hard to do in trading, is because no one ever follows these steps. We all get into trading hoping it's a get-rich-quick scheme and forget that we need to learn trading the same way we learn any other career in college or anywhere else that we learned a career. College would take you through course material step by step until you reached a goal. So let's build our trading career in the same way. So how do we do that? Well, first, obviously, we need to learn the basics of the market we're trading in. In the case of Forex, this means learning how the Forex market moves and what makes it move. And in the Forex market, the market moves in pips. So you need to know what a pip is. You need to know how to calculate a position size and place an order. You need to know a little bit about brokers so you can figure out what broker you want to go with. This would all fall under the category of learning the basics of the market you're in. Once you've accomplished that, it's time to move on. If you're going to be a technical trader, it's time to move on to learning technical analysis. You need to learn everything there is to know about technical analysis. This goes for candlestick charts, price patterns, candlestick patterns, indicators, structure, resistance, and support. It goes for trend, and anything else you can think of that has anything to do with technical analysis, you need to learn. And the reason you need to take time and learn these two first is because, one, obviously you need to know the basics for, again, very obvious reasons. You need to know how to place an order, how to set a stop loss, what going long and going short is. Everyone needs to know the basics. But the reason we have to learn so much about technical analysis is because we're going to use different technical factors in any strategy. Whether you learn one or build one for yourself, you are going to be using a combination of technical factors in order to build or a strategy that you learn. Again, both are going to use a combination of technical factors. So knowing technical analysis like the back of your hand is a must. And then we're learning or building that strategy. Now, this is where most traders go out and start trading with live money directly after this point, except most of them haven't learned the basics yet and don't fully understand technical analysis most of the time. And comment below if you're still here, by the way. Just thank you for being here. I really enjoy teaching people that are determined to actually become profitable traders. And if you're still here, that means you are absolutely determined. And I cannot wait to share all this with you because I truly think it can help you get to that next level in your trading career. But what normally happens, right? We normally get to this stage of learning or building a strategy. We learn one or we build one ourselves and we go out and start trading it with real money. And then it does work for a while, or it doesn't work at all, or it works for a while and then stops working. And then we switch strategies and go do the same process. We learn another one from another guru, or we learn another one from the same channel, just hoping it'll perform better. But in reality, you haven't completed nearly enough steps to trade with real money. you're only on step 3 out of 8, man. You got to or girl, you have to continue. And how we continue is after you have that strategy. It needs to be based on a set of rules, like the strategy we discussed here with CEST. That's the reason I break everything down into CEST, because that ensures that my strategies are rules-based. The reason we need rules-based strategies is we need strategies that we can stay consistent to. So since we have a strategy, let's just say, that we can stay consistent to, let's say it's a strategy from this video. Now you need to back test that strategy. We're going to do this, one, to train your reticular activating system to see this strategy very, very quickly, because trading is a pretty fast-paced game. So you need to be able to see your entries in a very fast way. We also do this to ensure that the strategy makes money with the way that you see the market. We could make a strategy as objective as possible, as rules-based as possible, but you could see the market slightly different than someone else and the strategy not necessarily work out for you. And we also backtest to build confidence in the strategy that we're going to need in order to have good trading psychology. Now, after the backtesting process, most traders think, oh man, I've put in a shitload of work. Surely to God, I'm done, right? Surely I'm done with this. Well, that's not correct. We haven't even talked about the two most important parts of your trading, which are risk management and trading psychology. A strategy is not even a third, or we'll call it a third, about a third of what you need to know. And that's all you've accomplished it for, right? Is you've accomplished about a third of what you need to be a profitable trader. Next up, you need to learn about and learn how to apply a risk management plan. These are things like risk capital. This just means a number that is a percentage of your overall net worth that you put into speculative markets. For me, that number is around 50%. I am okay with the risk of risking 50% of my overall net worth in speculative markets. That means the other 50% of my money is tied up in other things like real estate, like Vanguard funds, something a lot safer than swing trading Forex or trying to day trade in crypto. That's not where all my money goes. Risk capital needs to be a smaller portion of your money that you apply to riskier asset classes. Now, that's just one portion of risk management. Next, you need to know what you're going to be risking every time you place a trade. And you also need a rule for overall exposure, like how many trades can you be in at once. All of that would fall into the category of learning about and learning how to apply a risk management plan. Now, you may think you're done, but wait a minute. Next up, we have to learn about trading psychology. Now, at this point, you may be thinking, holy shit, Steven, this sounds like a lot more work than I thought it was going to be. And you're absolutely right. I had this harsh reality, this harsh slap in the face about a year into my trading career when I had been, for literally a year straight, losing money or breaking even because I had not completed these steps. I was at this learn or build a strategy step. I was still up here at number 3, and I was constantly losing money because I didn't have good trading psychology and I didn't understand how to apply appropriate risk management, which were, again, these are the two most important parts of your trading. So, number 6, we're going to learn about trading psychology. You're going to learn what trading psychology is. You're going to learn how to handle your emotions better. And just to give you a very brief overview of this, the way we handle our emotions better is by having belief in the strategy we are trading and by losing the fear of losing money. Now, you may be thinking to yourself, how do I get rid of fear of losing money? And no one wants to lose money. Well, the way we do that, and again, I get it, no one wants to lose money. You're absolutely right. But the way we mitigate that fear and get it to a reasonable amount, instead of you looking at your computer when you're losing a trade and freaking out to the point you're making emotional mistakes in your trading, if you use a good risk management plan, those emotions will be a lot less heavy on you and they will affect you a lot less. So risk management is one of the ways that we lose the fear. Now, backtesting and demo trading are the ways that we gain belief before we go into live trading with a smaller account. We need to backtest to gain belief. Then you need to demo trade to gain belief as well. And I don't mean demo trade like go out here and just place a bunch of random trades and go, I'm up in 3 months. Yeah, I did good. No. Demo trade with the exact strategy that you've built, the exact risk management plan that you have. When you're demo trading, you have to demo trade with an actual plan. Otherwise, it's completely useless. So at this point, after demo trading as well, after understanding trading psychology, understanding and applying risk management, after all of this, you're ready to build a full trading plan. This needs to be written or typed out in a Google Doc. Either way is totally fine, but it needs to be in front of you when you're trading so you can look at it. And what this is going to entail is all the strategies you're going to trade, all the different currency pairs that you trade those strategies on. It's going to include your risk management plan. It's going to include the things you've learned about trading psychology so that you understand your emotions and you have the reasoning for you feeling that way in front of you. It can include some of your goals. It can include the times that you trade. Just have it all in front of you so you can always be mindful of what your plan is. That way it makes it easier to trade and stick to that trading plan. And that, my friends, is the exact process that I went through in order to actually become a profitable trader. I spent a year doing everything else until I completed every part of this. Until I completed all of these steps, I was not consistently profitable. I may have had good months and bad months, but I was never consistently profitable. Whereas over the last 8 years, I've literally been consistently profitable every single year. And this is the reason. This is also the exact steps we take everybody through that comes through our paid programs. So right now, your job is to get through with all of these steps. If you need a little bit of help with that, we actually have a video course that's absolutely free that will take you through a majority of this information, at least get you accustomed to it. It may not be everything you need, but it's a completely free basics course, and it will give you a good foundation of each of these 8 steps that you can find at www.ttcforexcourse.com. It's also on the screen and linked in the description. If you're someone who's ready for some more advanced training and to be personally mentored by me, then we also have a little space available in our flagship program called the EAP Training Program. In that program, you will get a course that will take you through each of these, and also we have other strategies that we trade in the course. We have training on risk management and trading psychology. We have 3 to 5 emails of trades that I'm actually taking, by the way, that are based on the strategies you're learning that I send out 3 to 5 times a week. We have a video every Monday where I show you my plan for the week and what I'm looking to trade. That and much, much more. We pretty much teach you how to build a full trading plan in that course. And you have priority email, meaning any question you have, I will be answering those questions personally. So if you're interested in that, it is www.eaptrainingprogram.com. It's on the screen and in the description. And this program also comes with a 60-day money-back guarantee. So if for any reason you feel like the program is not for you, within the first 60 days, just email me and I'll have my support staff send you a refund as soon as possible. If that's not something you're interested in, that's totally fine too. Just make sure you keep it locked here by subscribing, clicking that notification bell. Make sure to click that like button, especially if you made it all the way to the end. Make sure to comment below. Follow us over on Instagram at The Trading Channel if you have not already. And I will see you guys in the next video. Talk soon.